Hey guys, it's Candus, and in today's QuickBooks tips and tricks, we are going to talk a little bit about reports. So this time of year, I commonly get asked, people start looking at their balance sheet and they see retained earnings and opening balance equity and net income, and they just don't understand what all that means. So I want to take a few minutes to show you guys a little bit around the reports to give you a little better understanding of what you're looking at. All right, so if you ever want to pull your reports where you can look at them side by side like I have, you can go up to Window and you can pick vertical or horizontal. Vertical looks like what I have. Horizontal looks like this, which is a little harder to read your reports. Then you can expand them and move them around. I also simplified this little shortcuts window so it was easier to see them. All right, so that's what I did. So one thing you're going to need to think about is, are you cash or accrual basis? You're going to need to choose that. This is 2018, I'm in. If you don't see it sitting right here, you're going to actually just go up to customize and you'll see accrual or cash in all the other versions. All right. What is the difference between cash and accrual? I've talked about this in other videos, but cash basis means at the moment I spend the money, it's an expense to me. And at the moment I get paid from my customers, it's income to me. Accrual is at the moment I bill my customer, it's income. And at the moment I get the bill, it's expense. So that's the difference. Just as a real quick synopsis. Basically, if you don't know which one you should be, always talk to your tax professional. All right, when you're looking at your profit and loss, it's got your income, your expenses, and then at the end it has whether you made a profit or you had a loss, depending on how much income you had minus your expenses, right? Now, when we get to the balance sheet is going to have your assets. That's things like your liquid assets, your current assets, which is more like your bank accounts, any equipment or accounts receivable. You're going to see that in your assets, fixed assets, okay? Other assets and fixed assets. And then it has a total assets for you. Then you're going to have your liabilities. Liabilities, you also have current, other liabilities, long-term. What's the difference? It's just how long you have them, all right? So current liabilities are going to be things like your credit cards. Other current liabilities are going to be things like customer deposits, sales tax, anything going to be any loans that are going to be paid within a year. If they're long-term loans, that's anything exceeding a year, right? It's going to be more than a year. So that's the difference. You'll see the titles are up here. Then below that, which is the main thing I want to cover today, is equity. So when we're looking at our equity, you're going to have, if you have a shareholder, you have contribution, or your partner, depending on what type of entity structure you have, those titles could vary. But basically, shareholder contribution is putting money into your business. Owner contribution is also putting money in. I have both on this file because it's a sample file that I create different examples in. You are only going to have one, depending on, sole proprietor is going to have owner, entity structures. If you have a corporation and you have shares, would be shareholder. Then down here, you're going to have opening balance, possibly. What is opening balance? Opening balance is the account QuickBooks creates so that whenever you go in to add a new account and you don't know where the money came from when you opened your checking account, a lot of times people put it to opening balance equity. Or when you're inside your chart of accounts and you're adding something new, whether it's a loan or bank account, and you go enter opening balance, the other side of that, because it's a double entry accounting system, it increases your bank account, but then it also adjusts the opening balance equity. That's what happens, okay? Then, so it's just a generalized account. Then retained earnings are your profit that you've made the previous years. So right now I'm pulling this in 2018. If I double click on this, it's going to show me, and I drop down all, that's how you would find what's in there. What it's going to do is QuickBooks naturally goes in at the end of every year and does a closing entry December 31st. And whether you've had a profit or loss, it adjusts it accordingly. So this is saying that my QuickBooks file it's had profit of $4,443.14. It's a sample file. But over the years of everything I've entered, that's where we stand. Then you'll see below that it has net income. And you're like, okay, where does that come from? This net income number, if I picked the exact same time frame on my profit and loss that I see on my balance sheet, $681.20, $681.20. So the retained earnings is everything prior year. So if you're in 2018, it's anything that happened 2017 prior. And the net income is going to be your current year. your 2018 year. Where do you sit? And then your total equity at the bottom is going to be all of these added together. And this shows negative. So basically a loss in equity. And the reason is because your total assets are $106,647.07, and your total liabilities and equity is also $106,647.07. That's because your assets are only $106,000, but your liabilities are $124,495.09. So the difference has to be an equity of, if you just do the math, you have a loss in equity because you actually owe more than you have in assets. And because you used an adjustment in probably opening balance equity to create that, it ends up making your equity negative. All right? So that's basically a quick summary of when you're looking at this, where do these numbers come from? I recently was asked by somebody, why is my retained earnings negative? That would mean that whatever you entered into QuickBooks for your previous time frame brought your profit and loss to a loss. Okay? I hope that makes sense. And if your opening balance, typically what accountants do is at the end of a year, they will take and they'll close the opening balance equity into the retained earnings to zero that account out. You would want to talk to your tax professional, see if they want you to do that. You can always ask them, but that's something that's commonly done just to clean up that account. All right. So I'm not going to go into all the reports of how you read everything, but that's just a balance sheet is your assets. And then that's your total assets are going to total, and then all of your liabilities and equity total, and the total liabilities and equity equal your total assets. That's how you do double entry accounting. You don't need to understand double entry accounting to use QuickBooks, but if you understand that for everything you do, like when you're opening a bank account, the other side of it is affecting most likely your opening balance equity unless you chose a different account, like say owner contribution or a different bank account that it came from to put it into that bank account. Those are all different things. So I hope this answers your questions. If you guys have more, I'm going to be doing a workshop to teach you guys more about how to read the reports, how to pull them, extra reports maybe you haven't been using. I worked with somebody recently as a private client, and I showed her some extra sales reports that she didn't even know existed. I want to put a workshop together. When I did a survey recently to you guys, that was one of the things you want to learn. Go ahead and I will put a link to the workshop that I have coming up above or down below. If you enjoy this, don't forget to subscribe. If you need help with QuickBooks, feel free to check out Confidence with QuickBooks, my online course that takes you from the beginning to the end. If you're a brand new user or you've been trying to figure out QuickBooks, but you've really been struggling trying to do it on your own, the course does come with support, so you can ask me questions and I answer them inside of the course. As well as if you enjoyed this tip and you'd like to receive them in your inbox, feel free to go up above or down below and join with your email, and I'll send them directly to you. And if you need help cleaning up your QuickBooks or fixing something and you want more of a private session, you don't need the full course, feel free to check out up above or down below. I'll have a link for my private sessions. Have an amazing day. I look forward to seeing you guys in the next tip. Bye-bye.